Hi everyone, welcome to BlockSnack, your daily crypto wrap-up for Thursday, April 23rd, 2026. We break down Bitcoin, Ethereum, and blockchain news, fast, clear, and without the hype. I'm Jack, and I'll walk you through what matters today. If that sounds useful, hit subscribe and follow the channel.
BlockSnack.
In today's video, we'll dive into the push for US crypto regulations, Bitcoin's potential bull trap, Ethereum whale activity, DeFi security updates, the rise of tokenized US Treasuries, blockchain and military cybersecurity, and changes at MetaMask. And just as always, a quick disclaimer. This content is for informational and educational purposes only and should not be considered financial advice. Always do your own research. Now with that out of the way, let's jump right in. A coalition of more than 100 crypto firms, including big names like Coinbase and Ripple, is urging the US Senate to advance the Clarity Act. This act is crucial as it seeks to establish a federal regulatory framework for digital assets. The coalition highlights several priorities: clear oversight roles for the SEC and CFTC, protection for non-custodial developers, and simplified disclosure rules. They warn that without comprehensive legislation, the US might lose its edge in the global digital asset market as investments and jobs move offshore. Ji-Hoon Kim, CEO of the Crypto Council for Innovation, emphasized the need for bipartisan legislation to set a global standard in regulatory clarity and consumer protection. Next, we look at Bitcoin's market sentiment. On-chain analyst Willy Woo warns of a bull trap forming, suggesting that recent price movements might mislead investors. Bitcoin has been moving sideways after sharp declines, a typical behavior before testing resistance levels. Despite a recent rise to $74,000, Woo believes Bitcoin remains in a bear market, as liquidity conditions, not price, drive the current setup. Investor activity has improved since February, but not enough to signal a market bottom. Meanwhile, whale selling continues aggressively, while retail investors are buying below $70,000, indicating the correction isn't over yet. Now for Ethereum's market dynamics. A notable Ethereum whale recently sold over $24 million worth of ETH and then repurchased a significant amount at a higher price, indicating renewed confidence in the market. This activity follows a liquidity shock on Aave caused by the Kelp DAO exploit, which saw Aave's deposits plummet. Despite this, Ethereum has stabilized above $2,350, and institutional demand remains strong, as highlighted by Bitmain's large ETH purchase. On-chain analysts suggest that such whale activity may signal that the market is nearing a bottom. Moving on to DeFi security, Hyperliquid has launched a $29 million DeFi policy center in Washington, D.C. This center aims to advocate for regulatory frameworks specific to decentralized exchanges and blockchain-based market infrastructure. Meanwhile, Andre Cronje's Flying Tulip has added a withdrawal circuit breaker to address the surge in DeFi exploits, which have totaled over $600 million in April alone. These security measures are critical as DeFi platforms face increasing threats from operational and infrastructure weaknesses beyond just smart contract bugs. Next, we explore the booming market of tokenized US Treasuries, which has surpassed a $14 billion market cap. This growth is driven by institutional investors seeking blockchain efficiency and regulatory clarity. Major players like Franklin Templeton and BlackRock are leading the charge, with products on Ethereum, BNB Chain, and Solana. The advantages of tokenized treasuries include 24/7 trading and fractional ownership, making them an attractive option for modern financial systems. The US military is exploring blockchain technology by operating a Bitcoin node as part of its cybersecurity tests. This initiative aims to leverage blockchain's decentralized structure for network resilience. While the military isn't mining Bitcoin, they are examining its potential as a cryptographic tool. This experimental approach reflects a broader interest in integrating blockchain into security frameworks to bolster the US dollar's global role. Finally, in the world of Web3, Dan Finley, co-founder of MetaMask, is stepping down after a decade at Consensus. His departure comes as MetaMask introduces advanced permissions, enhancing user control over DApp interactions. This feature is designed to reduce attack surfaces and improve security, ensuring MetaMask remains a leading crypto wallet. Despite Finley's exit, MetaMask's development and Consensus's roadmap continue to progress smoothly. That's it for today. Subscribe for daily crypto news, drop a like if this helped, and share it to support the channel. See you tomorrow for your next BlockSnack.